I'm Matt Bichard here in New York City for Nareit's REIT Week, the 2018 Investor Conference. Joining me today is Gary Wojtaszek, President and CEO of CyrusOne. Gary, thanks so much for joining us.
Sure, thanks for having me back.
Now, CyrusOne is truly a global player in the data center industry. Can you talk a little bit about the Xenium acquisition and how the company is ramping up its presence across Europe?
You know, the growth that we've seen in the U.S. over the last 3 or 4 years is really now starting to land on European shores, and there's a tremendous amount of growth going on there. So we're trying to build that European platform. Our first move was the acquisition of Xenium, which we hope to close any day now. That gives us a presence in London and Frankfurt, which are the two largest data center markets in Europe. In addition to that, we've got organic initiatives underway in Dublin and Amsterdam that we hope to close on in the next couple of months as well. So by the end of this year, we're going to be a pretty substantial presence in Europe.
So to continue spinning the globe, China is another market that has great growth potential for CyrusOne. What opportunities do you see there, and how much of a concern are some of the trade issues right now?
Yeah, so earlier in the fall, we made an acquisition or an investment into GDS, which is the largest data center operator in China. They have a dominant position selling to all the cloud companies in China, so Alibaba, Baidu, Tencent, all of those companies. And so we made a $100 million investment in them around September, October, and that's probably worth about $320 million as of today. So we've done really well on that. But the really big reason for partnering up with them is for the commercial relationship that we're establishing. So we're working on a number of deals where our customers are looking at capacity in China, and similarly, we're hoping to close a couple data center deals with their customers that are looking at expanding in the U.S. So it's going really well. You know, so far the discussions on trade and all that's not really related to data centers as much as some of the other industrials. But I think in general, I mean, both presidents are pretty commercial. There's a lot of bravado going on, but I think they'll eventually work through the issues, and I don't think it's going to impact us.
Great. Now, sticking here in the U.S., obviously we've talked many times about all the tailwinds that the company's got going in its favor. Flipping that on the other side, what's the one thing that does keep you up at night?
Well, you know, in the last 7 weeks, I've come from 3 discussions with 3 of the largest cloud companies in the world, and they're talking about needing gigawatts of capacity, and that's really concerning because from a dollar perspective, that's, you know, close to $50 billion of capital required to build out all of that capacity. And so, you know, the reason they're looking at that is they're seeing unbridled growth. They're very concerned about their inability to meet that demand, and they're reaching out to us and others in the industry to help them with that. So I'm concerned that, you know, we need to staff up appropriately to be able to meet all that demand, but it's a good problem to have.
And lastly, a major portion of the company's revenue is coming from these cloud companies. How large a percentage do you think these companies will eventually become for you, and what's the hurdle in convincing them to further outsource their data center requirements?
Yeah, that has been the biggest growth driver for our business. So 4 years ago, we didn't really have any business with any cloud company. We're traditional brick and mortar. Fortune 1000 customers were our bread and butter. We did our first cloud deal 4 years ago, and it's been accelerating right now. It's a little over 30% of our business. I expect eventually it's going to get up to 75% or so, because the cloud is in the early stages. I mean, it's an $80 billion business out of a $1 trillion annual spend. That's going to get up to like $600 billion. So there's a lot of room for growth, and, you know, our business should continue to skew way more towards cloud than it has historically.
Gary, thank you so much for joining us.
Well, thanks for having me.
For more from Nareit's REIT Week, be sure to visit Nareit's website, REIT.com.